What's up, you guys? It's your boy Henry, and today we are talking NIO stock. It has been so good to our family, and I just want to give an update on this week for what's ahead. I want you guys to make amazing decisions. So you guys ready for this video? Хорошо, вы готовы? Давайте мы сделаем some деньги. I just said let's make some money. I'm going to be away working the ARKH portfolio for a few days on Patreon and starting to plan the option trading course because I want to have it out in 60 days. So I'll miss you guys up until Thursday, but you can drop me your email for free in the link below, and I'll give you guys some updates and maybe some free content as I progress through the course. So based on the title, we are talking about NIO today, and you can tell NIO will be one of the stocks that I add to the portfolio for everyone that joins. I'm going to have an active buy sell alert, and I'm going to try to beat Cathie Woods by picking select stocks in all her funds that I like and excluding the ones that I don't like. Anyways, time for some straight facts about NIO stock from Uncle Henry. NIO just had a $1.5 billion stock offering, and I'm really going to get into what that means for NIO in the short term and why we saw a pullback on Friday. From first glance, the company said that it will issue 75 million new shares to raise about $1.5 billion. So what's going on here? So actually what is going on here is something called dilution. It's like when you have the sweetest wine or grape juice and you put some water in it, well, that makes it less sweet. That's kind of what's happening to NIO right now. The existing shareholders are getting diluted in terms of how much of the pie that they own, and these concerns are legitimate, but here's why it's not really that big of a deal. In my opinion, I'm about to put my whiteboard to use for this example. So here's the deal. As a longer-term NIO investors know, the company was nearly out of cash, legit broke, and in trouble in early 2020. But then everything kind of changed when the economic development authorities in China agreed to invest nearly $1 billion in exchange for NIO's agreement to move its operations to Hefei. I literally said that and invested $25,000 at 11 per share in the middle of July, and have a video on that if you want to check it out right here. And that was my conviction on July 17th before the killer run-up. And you know what else is a killer? Webull's promotion, which looks like it's ending today for 2 free stocks. The first is absolutely free when you sign up, and the second is free when you deposit $100, but you don't have to invest that $100. They're similar to Robinhood and give you 2 free stocks, so it's a really amazing deal if you want to take advantage of it. Link in my description. You see, raising money does hurt shareholders short term, but raising cash and diluting shareholders is absolutely necessary. For example, we're going to finally look at the whiteboard now and take a brief visual on what this looks like. All right, so scenario number 1, we're gonna have 2 scenarios, and keep in mind, NIO is worth $22 billion right now. Scenario 1, okay? So this is number 1. NIO doesn't raise money, and we hypothetically own 0.01%. That's how much we own of the company, or meaning that we own $2.2 million. Okay? 0.01% of the entire company of $22 billion is $2.2 million. And in 5 years, it doubles to $4.4 million, okay? So it's a double to $4.4 million. And they double, and it takes an entire 5 years because they have a very hard time growing. They're strapped for cash, they're having difficulties, but they still take advantage of the China opportunity, and they still double in 5 years, which is reasonable, okay? Scenario number 2, guys, this is gonna be super interesting, all right? Watch this. So NIO raised $1.5 billion, right? And instead of us owning 0.01%, right? Because that's how much we own, but now we are diluted. So that dilution, $1.5 billion, let's just call it $2 billion. We're gonna call it $2 billion. I'm gonna be very generous here. So that's about 10% dilution, all right? So that means we go from this to 0.009% because 10% of this is about 0.001. So I take that and subtract that. Don't worry, you don't have to be a math genius. I'm just saying, we went from this to this. We actually lost a little bit of our ownership. So instead of owning $2.2 million now, we are diluted. So we only own 1.98 million, okay? That's because this is about 10% less than the $2.2 million, because 10% of $2.2 million is about $220,000. And I'm gonna take that, subtract it by 10%, or multiply by 0.9. Same thing, you don't have to be a math genius. Please stick with me because I'm about to make this stupid easy and stupid awesome. All right, so we now have $1.98 million because we got diluted. But let's talk about the growth. Henry, I just lost $220,000. Yes, but here's what happens over the same 5 years now that NIO has more capital to work with and expand its operations. Imagine this, due to the cash, NIO grows much better than scenario one. In fact, because they are able to capitalize China and grow their vehicle sales rapidly, they get noticed and expand into Europe. Now, instead of doubling their growth, they 5x their growth, 5x, raz, dva, tri, čtyři, pět, and they do that in 5 years. And guess what happens to your $1.98 million? It actually becomes $9.9 million. Literally almost $10 million. So you see how NIO raising money hurts you in the short term, right guys? It does hurt you in the short term, but in the long term, this isn't an issue at all because the company gets to grow way faster than it would without the cash. I hope you guys like my little creativity there. Let me know in the comment section below. So should you buy the stock or should you sell the stock? Well, the wisest thing that you can do is ask yourself a few questions, and then I'll tell you my opinion on what might happen to the stock. Number one, do you believe in the growth of electric vehicles? And number two, do you believe China wants to push its homegrown electric vehicles, or do they want to promote China? Either way, electric vehicles are going to take over because they're becoming cheaper, better for the environment, and are growing in popularity simply because their design, speed, and performance is better than an ICE vehicle or electric combustion engine vehicle. The future of electric vehicles in China, which is likely to become a large market, will have a lot of competition, but guys, NIO is well positioned and has sold over 50,000 vehicles and probably way more at this point. You guys see next to every single Starbucks, there's a Dunkin' Donuts not too far, right? Or Burger King near McDonald's, or a Lowe's near a Home Depot. Well, this has to do with game theory and Nash equilibrium concepts that I learned in business school, but I'll break down my $300,000 that I spent on my Drexel education and give it to you guys in one sentence. Businesses open shop next to each other to capture all of the maximum demand and optimal traffic from those customers so they can make more money. And that's because there's so much high demand for those certain locations that competition can be fierce, but still very profitable. I think the same will happen for NIO and Tesla in China. In fact, not only do I think they will sell well, but they have a lot of strong partnerships, which will help them against Tesla's secret weapon. If you haven't watched my Tesla video, here is the last one where I break it down. But essentially, the secret weapon is autonomous driving. There is a company called Mobileye, and it was among the world's leaders in self-driving technology. It was actually at the core of Tesla's first generation autopilot, a system that was years, even a decade ahead of the competition, but eventually the two companies decided to part ways because of the disagreement between Elon Musk and Mobileye. Mobileye drifted for a while, but then was acquired by Intel, the chip maker. That's a massive company. And here's where things get really interesting. Intel has some big plans for creating a fleet of self-driving robo-taxis that will rely on Mobileye Level 4 autonomous technology. And guess who? They have a partnership. NIO and Intel entered into a partnership in November 2019 that calls for the Chinese company to build the cars that will feature the Intel/Mobileye autonomous system. So what I'm saying is NIO will have autonomous vehicle capabilities to compete with Tesla, and the market for electric vehicles will be more than large enough for the two dominant competitors. Whew, sheesh, I feel like I'm back in my game theory class talking about competition and business, but that's cool. I kind of miss being a student. But I also enjoy being a teacher and educating my YouTube family who likes the smash button for Uncle Henry. You do that, right? Let's get to the price target for NIO and what I think it is worth. And by the way, check out the recent upgrades on Yahoo Finance from UBS and Morgan Stanley two distinctly reputable banks on Wall Street. There was an upgrade from UBS from sell to neutral, and Morgan Stanley went from equal weight to overweight. But in my opinion, Wall Street doesn't always know what they're doing, but in this case, they might know what they're doing. They don't understand electric vehicles, and that's the problem, and that was evident with Tesla, so I'm going to do their work for them. NIO is growing revenue by 50%, but they are still deep in the hole on producing profit. However, I love EVs and this stock has a lot going for it. I would say there is opportunity for it to swing towards $20 per share in the near term. And if things go fantastic, it can absolutely double towards $30 and $35. But in the super near term, a lot could happen and bad news could pull it back. However, I'm going to say that capital raise is not a big deal overall. That definitely does not warrant a large pullback based on my analysis right here and my simple example. Instead, how fast NIO goes to market with its vehicles and raw sales is the most important thing right now. And I'm waiting for now. I took a bunch of profits so I can invest in the future options course and build ArcH on Patreon with M1 Finance, which is also linked in my description. But I still have a position and I may enter a little bit more depending on Monday and Tuesday's trading. If I do, I will send that alert on Patreon. This stock is probably the hardest on my list to analyze because they are so cash flow negative, but so attractive from a big picture perspective. So I really want to give you guys an update and share some thoughts. I basically think it could swing to $20 per share short term if markets trade higher this week, but long term, I can see the stock could easily, and I mean easily, go to $50 or $60 if they execute properly and gain momentum in the Chinese market, and that whole process just continues in terms of their marketing efforts and their sales efforts. Being honest with you guys, this stock doesn't trade on fundamentals at all because it's more of a cult stock that has people hoping it will be the next Tesla. So regardless if I have a Wall Street background, it is very difficult for me to really value this stock, and I'm being honest there. That's why I'm going to do probably 20 to 25 different companies in ArcH portfolio, and I plan to manage because diversity is very beneficial for a smart investor. In economics, the first lesson you learn is there's no free lunch in life, meaning nothing is truly free. Even a free milkshake at Shake Shack still requires you to drive there and wait in line. And time is money, so you have an opportunity cost to get something that is free, and that is your time. But the most interesting thing I learned in my senior year in my advanced level financial investment analysis class is diversification is the only, and I mean the only, free lunch in finance. Meaning you could make great returns with 20 stocks rather than 5, and you will do so safer since when you own one stock, it could potentially go bankrupt, but when you own 20 stocks, you have so much movement of stocks going up and going down that some of the winners negate some of the losers, and you end up having a balanced portfolio that does trend upwards, but has much less risk than owning 1, 2, or just 3 stocks. So that's it, guys. I don't want to make this video too long. I have an Instagram handle right here where you can add me. I have a course that I'll be working on for a couple months, but if you want to drop your email, that link is below. Other than that, I love you guys and everyone. I hope you guys really kill it this week with trading. I hope you guys be aggressive in learning, and I'll see you guys on Thursday. Yes, your boy is going to work on Patreon and the future course. So I'll miss everyone for a few days, but I'll be back very soon with another video that's gonna make you stupid. And I mean stupid rich. Be aggressive in learning, but be safe in investing.